A very good morning. Welcome to Daybreak Australia. I'm Haidi Stroud-Watts in Sydney.
I'm Annabelle Droulers in Hong Kong. We're counting down to Asia's major market open.
Good evening from Bloomberg's world headquarters in New York. I'm Vonnie Quinn. The top stories this hour. The U.S. securities regulator says its X account was compromised. It denied a post saying approval had been granted for spot Bitcoin ETFs.
US stocks struggle for traction ahead of Thursday's US inflation data. Treasury yields remaining above 4%.
Also ahead, BlackRock cutting hundreds of jobs, blaming what it calls unprecedented changes in asset management.
Plus, AI in focus as tech giants and startups showcase their cutting-edge innovations. We're live at CES in Las Vegas.
Well, let's get a quick check on Wall Street. We finished a choppy session with the S&P 500 down fractionally, about 7 points or more than 0.1% there. We did have a deal, and that was responsible for the biggest gainer and the biggest loser. Juniper Networks up more than 22% after Hewlett Packard Enterprise was said to be buying Juniper. Hewlett Packard Enterprise down 8%. They were the two main movers today. If you take a look at the NASDAQ, it was up about 0.2%. So a lot choppier than the previous session's action. The 10-year yield at 4.013%. We had Bill Gross saying that he's turning away from treasuries at these levels, that the 10-year at 4% is overvalued. Plenty of people weighing in on that particular position. It didn't have that much of an impact on how yields moved today. And then it looks like crude oil is consolidating at this level, 72.24. It's been trading in around a $5 range since December. Spreads, though, signaling the rebound from its biggest drop is reflecting stronger underlying physical fundamentals. But the big story just this hour is Bitcoin. We had SEC Chair Gary Gensler saying the regulator has not approved Bitcoin ETFs Tuesday and that the agency's X account had been compromised. This resulted in an unauthorized post appearing to confirm the news that, yes, indeed, the SEC had approved Bitcoin ETFs. So to sort through what's going on, let's bring in Bloomberg Intelligence senior ETF analyst Eric Balchunas. Eric, we possibly could have predicted that some fireworks like this would have happened, but not from an SEC X account. What does compromised mean, do you think?
Yeah, it's unclear. Look, the crypto world has done a couple things like this since this BlackRock filing 6 months ago. So it's not like a total shocker. We also had Cointelegraph, who was said BlackRock was approved about a month ago. There's been a series of things that have been head fakes for the past couple months. So I'm kind of used to it at this point. The reason this one was interesting is that we expected to see approvals tomorrow between 4 and 5 p.m. We thought that's when the moment was going to happen. And so my first take was, well, maybe they just scheduled this tweet and accidentally did it a day early, because this tweet would make perfect sense in terms of all the intel we're hearing tomorrow at 4 or 5 p.m. And then they're going to trade on Thursday. That said, regardless of all this shenanigans and what happens, as far as I know, we're still on track to have approval tomorrow and launch on Thursday.
But Eric,
but this is a bit of a interesting curveball to the situation. But it looks like the price of Bitcoin at the end of the day was flat today, so it's not like anything crazy happened. But it's just another turn in this roller coaster known as crypto.
Eric, why would the SEC pre-prepare a tweet, though? And this is all speculation, right? I understand your point that it would have been a perfect tweet if the SEC were approving ETFs to put out tomorrow after the market close. But the SEC is going to be more careful than that, no?
I would think so. But look, someone's managing this account. It's the government. People make mistakes. So that was my first thought, because if you look at the language, it really sounds SEC-ish. If somebody from the crypto world did write this, they're really good, or maybe they used AI, because it really reads like a tweet like this. And remember, the SEC and Gary have been putting out tweets for the past 2 days, sort of saying, hey, if you're looking to invest in crypto, here's some warnings. So it's not like they haven't been active on Twitter regarding this topic. So again, it smelled and felt like we were getting an early Christmas present. They were just going to approve it. The other thing is, if you were looking for max impact, fun, or manipulation, if this was your goal of a hacker, why wouldn't you tweet rejection? Because the price would plummet big time. Approval is kind of baked in and expected. So there's all kinds of questions that hopefully we'll get answers to.
Eric, does this fundamentally change your expectations when it comes to this approval and the market implications?
No, because I've spent the last 6 months, and particularly the last 3 weeks, with little sleep and tracking this, and nobody of the 11 issuers and their law firms and the SEC staff has gotten much sleep or had much time off in the past 3 weeks. They have really buckled down, and there's 11 issuers with 2 different documents, 19B4 and S1. Each one is over 200 pages, or at least 100 pages, 150, full of technical legal language. They've been going back and forth with 6, 7 amendments. This is a lot of man hours, a lot of legal billing time over the past couple weeks. And when you talk to them, they're like one person didn't sleep last night because of the last minute comments. So what we're hearing is that all of this is to just get it done and to meet this January 10th final deadline, which is the ARK ETF. So they have to decide on this tomorrow one way or another. And given all of this, and all of the staff's work came from Gary. It's a 10th floor issue. He directed them to do this. So at the end of the day, tomorrow's deadline with ARK, they have to do something. It's not like they can go, oh, this tweet makes us have to rethink things. I mean, we only have now, what are we in, 20 hours until we get to tomorrow afternoon when ARK's due. So my guess is this news flow it moves so quickly. Like an hour ago, we were talking about the fee wars, that by tomorrow this time, we kind of chuckle at this and we're looking at the formal approval.
Eric, can we tell anything about the price action when we finally do get a decision? I mean, we did see Bitcoin spike. We saw Coinbase spike. We saw BITO, the futures ETF that is already out there, spike and drop again after the news. Does that mean that's what's going to happen?
Look, when it gets approved, maybe there'll be a tiny little bump because it's finally that we can, pop the cork on the champagne finally after 10 years. But you remember, this whole run-up in the past 6 months has in some ways largely been about the ETF optimism. Many people out there are talking about buy the rumor, sell the news, and the news would be the actual approval. So some people are expecting a sell-off as people take profits and, quote, sell the news. But there's so many people saying that it is a sell the news event. Sometimes it isn't. And again, we're not in the business, nor are we allowed to predict the price. So I don't know. And I wouldn't, honestly, even if I could, I don't know. But I will say that what we're telling people is that ETFs are like bridges to the advisor world in particular. And these bridges are being set up, 11 of them at first, including BlackRock and Fidelity, some major bridges, from the crypto world to the advisor world and institutions. And it can't be bad for crypto if there's bridges between those worlds and they start to see traffic. So long term, this is probably a good catalyst for the price of Bitcoin. But short term, who knows? I mean, there's all kinds of things that are baked into the price or not. But I would say approval would not be the surprise. The surprise would be if they rejected it. And that's why I think if you were going to hack the account, that would have been the move. Again, if you were in like a Bond villain and into like the max panic causing situation, that's what you would have tweeted.
Bloomberg Intelligence ETF analyst Eric Bochunas there with the latest. Let's get you to Bell for the setup as we get into trading here in Asia, Bell.
Yeah, well, Heidi, it's not quite the same level of excitement that we have in Asian equities as to what's been happening in crypto markets just in the last couple of hours, because you can see here very, very range bound as we look ahead to the start of the Asian trading session. We've already got Kiwi stocks online to the downside just fractionally here. But the setup today really just tracking what came through on the Wall Street session. So again, just sort of struggling for direction. Some mixed moves in mega caps. We saw oil on the move. Treasury yields as well, that 10-year holding above 4%. So continuing to put some pressure on the Japanese yen here. You can see close to that 145 mark still. Let's change on, because Japanese equities are really the ones to keep a close watch on today throughout the trading session. We've got the Nikkei here yesterday reaching a 1990 high. That's the highest level we've seen since the bubble economy burst. A lot of optimism, of course. We've seen that huge rally in Japan stocks over the course of last year. But investors are really liking these further signals that we're finally starting to see actual growth in Japan take hold. Also playing into that, of course, is that weak yen. It helps the exporters, and Vonnie as well, that expectation that the BOJ likely to stay dovish for a period to come, of course, unlike the counterparts over in the US.
Exactly. Well, let's continue to chat about that, Belle, because our next guest thinks that the Fed won't cut until the end of this year, at the very least, perhaps even after that. Layla Pence is president at Pence Wealth Management and joins us now. Layla, thank you. Earlier, we spoke with Lael Brainerd, and she pointed out that companies are not passing on decreases in prices, right? Disinflation. Is that something that the Fed has to consider when it considers the trajectory for inflation?
I think they should. Certainly, inflation is being a bit more sticky. It is going down, but I think this is why we predict that, they're not going to do the 6 interest rate decreases that everyone is expecting, and that could be a trip-off here for the market. But we do think they are going to lower rates, but we think that it's probably not going to happen at least until May.
So you've brought forward then your idea that it won't be until the end of this year. What caused you to do that?
Well, we do see oil prices going down, which is a big driver of inflation. We do see it slowing down enough, and we do see that they don't want to. They want to have a soft landing, and they will need to reduce rates. It's just they're not going to reduce it as many times as the market thinks.
Just a couple of months ago, though, you were very convinced that it would take a whole another year. What has caused you to think that it's going to take only just maybe 5 months now? Is the economy slowing more than you think, or is inflation stickier than you thought?
I think, inflation has really come down a lot quicker than we thought. Like you said, a few months ago, we thought it would take a lot longer for the Fed to reduce rates, but they've actually come out and said that they will reduce rates by 3 times. So we've always been a believer not to fight the Fed. And I think the data confirms the fact that they should reduce rates later on this year, just because inflation is coming down a lot faster. And, the biggest problem is the commercial real estate market and their debt, a lot of refinancing coming. So they don't want to have that bomb here of a lot of foreclosure. So they have to start indicating that rates should be coming down, so that will ease a little bit of the commercial market area, which affects the banks and affects our economy. So I think they're doing the right thing by telling us that they will reduce rates, albeit not as fast as the market thinks.
Layla, how has that been affecting your advice to clients and how they should be positioning themselves if we are indeed finished with the rate hike cycle and going into, in very short order, a rate cutting cycle?
Well, we're definitely starting to lock in some, getting out of short-term bonds, going into more medium to longer-term bonds to lock in these high rates that we have now. We're also looking into getting more into small to mid-cap companies, which is something we have not done for a while. Those companies tend to benefit from potentially lower rates and lower costs in terms of their intakes. So those are the 2 main things that we really think the lower rates are going to affect. And we tend to also start looking into more value stocks, like the 493 companies in the S&P 500. They should start doing better this year.
Well, that's a lot to choose from, Layla. Just curious about your thoughts on the bond market, because you said, you're starting to lock in profits and get out of short-term bonds, and you're looking at medium-term bonds at this point. What did you make of what Bill Gross had to say, that the 10-year looks rich at 4%?
Well, obviously he's the king of the bond market, but we think 4% is going to go down as interest rate comes down. So it is a bit high right now, which is why we want to lock in those rates while they're high, because we do think that that's not completely sustainable, and that will, as the Fed reduces rates, those long-term bonds rates have come down quite a bit. I know a few months ago it was almost at 5%. So we've seen a huge drop in the long-term rate, and we think that will continue a bit more as the Fed actually acts.
All right, Layla, thank you so much for joining us today. Much appreciate your time. That's Layla Pence, president at Pence Wealth Management. Still ahead, Taiwan's opposition party is rallying hard for support ahead of presidential elections. We'll have details a little later. Plus, Boeing's largest ever monthly sales haul for the 737 MAX overshadowed by the crisis meeting focused on safety issues. Analysis with Morningstar coming right up. This is Bloomberg.
Well, the CES 2024 tech conference kicked off today in Las Vegas with AI and electric vehicles unsurprisingly taking center stage. Joining us now is our co-anchor, Sherry-Ann, to take us through the latest high-tech gadgets and showcases. So day one, this is, as we know, a high-tech extravaganza in what is an extravaganza of a city, right, of Vegas. What have been some of the highlights for you this year so far?
I mean, it's that time of the year again, right? So we're at the Las Vegas Convention Center, and inevitably, Heidi, as you said it, it's all about AI. We're talking about Samsung Electronics coming out with a robot vacuum that can use AI to detect AI stains. I was just with Nikon's CFO, Aki Tokunari, who was telling me about using AI in their healthcare devices. So everybody is really jumping on the AI bandwagon. And of course, we have the king of AI, NVIDIA, with its own product announcements in order to lure consumers to PC AIs. I spoke also to the NVIDIA supplier SK Hynix, which just became the second largest stock in South Korea, really riding high on this boom of artificial intelligence. CEO Kwang No-jong telling me that he expects that in 3 years, the market value of the chip maker will double. So we have more than 4,000 exhibitors here from more than 150 countries and territories. It's going to be a busy week.
Yeah, for sure. And Sherry, you know, beyond AI, flying cars have been popping up at CES for a few years at this point, but we seem to have a couple of new models making their debuts this year. Tell us about them.
Yeah, I mean, it's becoming a crowded field, isn't it? I mean, we have Joby in the U.S., Volocopter in Germany, Ehang in China, and there are still many challenges in this field, whether it's battery technology, safety challenges, regulatory and policy issues, but everybody's coming up with new ways to transform mobility. I spoke to the Hyundai Group president and CEO of Supernal about their flying taxis. Take a listen.
We're very excited to unveil our product concept. What I mean by that is this concept design will become more or less final product that we are trying to get into market in 2028. In flying taxi, there are many names for it, but it is an airplane, and it is a hybrid between helicopter and fixed wing, like a 737. So it has wings, and then it's powered entirely by batteries. So that's what revolution is about this type of a vehicle. So it can take off and land vertically in a very small confined space, so like city populated areas. And then it's going to be very quiet compared to helicopter. And it has a good cruising efficiency because it has wings and no emission. So those are the very attractive features.
To get you to commercialization by 2028, how are you in the process, especially when it comes to submitting your application for certification to regulators? When and where can we expect those test flights?
Yeah, we believe the foremost important thing is to make this airplane safe. So this is for public consumption. So we have to make it as safe as possible. And so we're shooting for commercial aviation safety standards, which is amazing. So in order to go through that, we got to do a lot of flight testing and ground testing and so on. So our target date for entry into service, as I mentioned, is 2028. You back out from there, 2028, and we will try to fly full scale, what we call technology demonstrator, by the end of this year, 2024. And from that point on, we'll have a series of flight test program going through, and then finish the certification.
And you've applied for certification already? Not yet.
Middle of this year, we will apply for certification.
And it's just in the U.S. Do you have plans for other locations as well?
U.S. is undoubtedly, unarguably, I should say, the largest market for this type of vehicle or business. So we are certainly trying to open the markets, various locations in the U.S. And also we are looking at Europe, of course, and Asia as well.
Given your focus on the U.S. first, at least, is that why you're investing in a new manufacturing base? Can you tell us a little bit about potential locations, how much Hyundai is putting in here?
We are still studying the location, exact location, so it's too early to say where. But the strength that we have, Supernal has, is we will be able to leverage and capitalize the tremendous mass manufacturing capability that Hyundai Motor Group has. So we are developing a lot of new manufacturing technologies as well, not just vehicle technologies. So depending on the making business sense and also where we open the market, we will decide the location later.
What announcements, Sherry, are we expecting when it comes to, obviously the other big focus for CES this year, right? EV battery makers, EV car makers.
Yeah, these batteries so important even when it comes to these flying vehicles, right? I was just speaking to the Honda Motors CEO, Toshihiro Mibe, today, who was also telling me about their new EV series to be first launched here in the U.S., their first models coming out in 2026. He also mentioned the latest when it comes to autonomous vehicles, that plan to release it in Japan will be pushed back a little bit. We'll have more on that conversation coming up. But really, when it comes to the broader EV industry, we have seen really the challenges out there when it comes to demand, right? I mean, we have seen stronger sales of EVs here in the U.S., but the demand picture in China has been pretty murky. We will be speaking to South Korean EV battery maker, the only one coming to CES this year, SK On. And what we also care about will be really about not only those challenges of global demand, but also geopolitics, given that we have seen China now really release these new restrictions and export controls when it comes to these key ingredients in EV batteries. Vonnie, Heidi?
Exactly, Sherry. Can't wait for some of those conversations. That's our Daybreak co-anchor, Sherry Ann, there at CES in Las Vegas. And stay tuned for more coverage from CES this week. Tomorrow, we'll be speaking with Xpeng CEO and co-president Brian Goh. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBgo. You can also customize your settings so you only get news on the industries and assets you care about. This is Bloomberg. Some breaking news. Amazon's Twitch unit is cutting staff perhaps as soon as Wednesday, according to people familiar with the matter. 35% of its staff, or 500 employees, to be laid off by Amazon's Twitch, the live streaming site. The cuts could be announced as Wednesday, as I said, and they come over concerns about losses at Twitch. Several top executives had left the company in the span of a few months, as we know. A Twitch spokesperson declined to comment. As you can see, Amazon is unchanged after hours. Twitch supported about 1.8 billion hours of live video content a month and is enormously expensive for Amazon. Once again, Amazon's Twitch to cut about 500 employees, or 35% of its staff.
Well, Ronnie, let's get back to one of our top corporate stories. And the Wall Street Journal was reporting that Boeing CEO Dave Calhoun told employees that the company needs to acknowledge its mistake. Boeing ended 2023 with its largest ever monthly sales haul for the 737 MAX. But that model is again under increased scrutiny after last week's fuselage blowout on that MAX 9 plane on Alaska Airlines. Our next guest says, despite the reputational hit, he expects Boeing to fare actually quite well as they accelerate their deliveries of 737s and 787s. Joining us now is Nicholas Owens, industrials equities analyst at Morningstar. So, this comes almost 5 years since the fatal incidents involving the MAX. Are you concerned about the fact that these mishaps seem to be a series of shortcomings when it, be it we look at things like loose bolts or the cabin pressure alarm issue?
I think in short, yes. I would say it's disconcerting, and people, the reputation of this plane and Boeing by extension has come under a series of threats. I will say that I think the actual issues of those crashes in 2018 and 2019 are very different. What we're looking at here is yet another example that's come up in the last 2 or 3 years of things that are just not quite right in Boeing's manufacturing process. And I think that has somewhat to do with COVID and the disruption to their assembly line process that the grounding had. So they're related, but it's not the same issue. But it's very disconcerting that there always seems to be another thing. And it's good to hear the CEO, saying they have to acknowledge mistakes, because I think that's an important first step to trying to regain their reputation.
When it comes to customer confidence, I mean, it comes down to the fact that this is still a duopoly, right? We have a great Bloomberg opinion piece out on the terminal today saying, well, Boeing may now be the poor relation, but it is still 1 out of 2 in the duopoly. So is it really concerning for the business, given that customers, by and large, don't have much of a choice?
Well, I think that's an interesting point in that from a financial or business point of view, fixing these bolts will not cost a ton of money. And there's not a huge number of planes that seem to be affected, at least for this issue. But as I was saying, it's the reputation that they have to worry about. And yes, because there's a very long wait list for these planes, and many airlines their whole operation is geared around using one or the other, there's not a lot of other places to go. But I don't think that anyone should allow Boeing to be complacent because of that. They still have to be held to the highest safety standards and so on. And I think it's also important to remember that everyone walked away from this incident, as well as the one in Tokyo over the new year. And that's a testament to how well engineered and safe these planes generally are. Even when something goes wrong, there's a lot of safety systems that keep people safe, if that's any comfort.
That it does. I don't know if it's any comfort in the Alaskan Airlines situation, because a lot of that came down to pure dumb luck, right? The fact that there weren't people actually sitting, in those seats.
Yeah, and also that the door blew out when they weren't at full height altitude, right? In my view, several things have to go wrong for one of these things to happen, and that's the disconcerting part, is that when an incident like this happens, it means that multiple things went wrong. Like you, I think, alluded to, Alaska had warning buzzers about this, about cabin pressure that they were investigating, but hadn't investigated that door yet, et cetera. So at the end of the day, those bolts should not have been loose, and I think that's going to be laid at Boeing's doorstep.
When you take a look at the metrics between Airbus and Boeing, Airbus is beating them on just about every metric, right? Deliveries, order backlog, operating profit, cash, debt, market cap. Do you expect that gap to continue to widen? Does this affect, I guess, how you rate a stock like Boeing?
Not in a huge way. I mean, Airbus has taken market share, and especially in this narrow body area, which is interesting. But it takes decades for that to move the needle, in my view, just because the products live a long time, the product cycle is very long. And in a screwy way, Airbus was also disrupted by COVID in a way, couldn't run even further ahead, if you will, because everyone in the manufacturing business has been disrupted for the last couple of years. We do think that Airbus essentially outcompeted Boeing by having a newer design airplane. The Airbus platform is more extensible than the 737 platform, and that's really the root cause of, in a way, those crashes in 2018, 2019, that they were trying to do more with an older design. This stuff and the tail fin assembly and the other things that have come out of Spirit over the last year or two, I think have more to do with a disrupted manufacturing process that they haven't yet buttoned down.
Nicholas, does this make the idea of COMAC becoming a real market contender more of a compelling narrative? Maybe not for major airlines, but perhaps across certainly emerging markets and some of those markets that we know China, already has pretty solid groundings in.
Yeah, I think, again, it takes a long time to move the needle in terms of the number of planes out there and the kinds of scale that would take a COMAC to become a real number 3, if you will. But at the margin, it's easier for some airlines to replace their 737 orders with COMACs. Again, it's going to depend for them on kind of what routes, what range, what performance they need. The COMAC is still not quite the same league of an airplane, but it can serve a purpose, right? And so at the margin, that does give some buyers an alternative to, in this case, Boeing. I think it's an easier swap. But again, it would take decades to move the needle. And even in the wake of these incidents in the last couple of days, our MOLT rating for Boeing remains wide because they're in this duopoly with Airbus. And my fair value estimate, which is a free cash flow estimate, is unchanged at $232. I already have a more conservative ramp for their deliveries than the company has stated. So if they have to slow down something or rework 171 planes, I don't think it's going to make a huge difference to the value of the stock, even though obviously the stock's been moving here on this news.
Nicholas, really great to have you with us. We appreciate your time. Nicholas Owens, Industrials Equities Analyst at Morningstar there. Vonnie, we've got some breaking news.
Jane Street is reeling in the profits. It came in with $7.3 billion of net trading revenue in the first 9 months of last year. The prop trading giant benefiting from market swings primarily and an expansion of its products. It's one of a select group of firms, of course, as well, that can create new shares of ETFs. And so it's working with many companies that issue them. So if those Bitcoin ETFs go ahead, for example, Jane Street would be the creator of choice for some of those shares. But once again, Jane Street in the first 9 months of the year reeling in $7.3 billion of net trading revenue. The results were disclosed to investors as part of a debt deal. And it's also showing that the company is expected to generate $3 to $3.5 billion of net trading revenue in the fourth quarter. So that would make it a $10.7 billion year in the full year of 2022. This is all according to people familiar with the matter. BlackRock, meanwhile, the world's biggest asset manager, is slashing 3% of its global workforce. The firm says 600 employees will lose their jobs. Bloomberg's Sue Keenan joins us now. And Sue, Larry Fink citing a dramatic shift in the industry as a reason.
Yeah, absolutely. And BlackRock will be reporting its earnings at the end of the week. The CEO and company president saying in a memo to staff that they're seeing profound changes in the industry, more than they've ever seen since the founding of the company. As a result, they're making changes and actually expect to have a larger staff by the end of the year, even with these cuts. Reduction in global workforce of about 3%. You have to remember this time last year, they cut about 500 workers and then had further cuts in June that amounted to less than 1% of staff. But BlackRock is among several big money managers, including Wellington Management, T. Rowe Price, that have recently cut jobs and redirected budgets in response. Executives say that ETFs have become the preferred vehicle for both index and active investment strategy, and that the firm is growing across the globe, including in Europe and in Asia. So you saw CEO Larry Fink and President Rob Kapito say in their memo that of all the changes they're seeing, quote, perhaps most profound are these new technologies that they believe are poised to transform the industry and every other industry. You have to believe they're talking about AI among these technologies. BlackRock is aiming to expand into the growing market for alternative investment with the goal of doubling revenue from private markets over the next 5 years. The firm has more than $9 trillion in assets as of September. And as mentioned, they will be reporting their earnings on Friday. Again, in the past year, it's been an interesting time because they did have a strong 2023, rising about 15%. But since the beginning of the year, shares are down about 2%.
Meanwhile, Morgan Stanley displacing Citigroup as the least loved banking stock.
Yeah, this is on the basis of Bloomberg data. We take a look at all the analyst ratings on the 6 largest U.S. banks. And Citigroup, which had been in last place, is now getting a bit of love and has been replaced by Morgan Stanley. The change came this week when an analyst at HSBC Holdings shuffled his recommendations, upgrading Citi and lowering Morgan Stanley. Stanley. Saul Martinez wrote in his notes that Citi is an attractive vehicle to gain bank exposure, adding it in as HSBC's preferred choice among large cap banks. And they've got Citigroup suddenly getting a lot of love also from widely followed Wells Fargo analyst Mike Mayo. He named Citi as his top pick and said the stock could double over the next few years. Morgan Stanley, meanwhile, most analysts have recommended that investors hold the bank and not add to shares. No analyst, however, has given it a sell rating, but it is at the bottom of the pile. Back to you.
Bloomberg Sue Keenan there with the latest. Well, coming up next, Taiwan's opposition KMT tries to rally support as it seeks to unseat a government that it says is putting the island at risk. We'll have a report from one of their rallies just ahead. This is Bloomberg.
Defense Secretary Lloyd Austin was hospitalized for complications from surgery to treat prostate cancer. This sheds new light on his health and mystery around his disappearance in recent days. Joining us now from Washington is national security reporter Daniel Flatley. Dan, at the very least, this has been a little bit embarrassing for the Biden administration. What's the upshot?
Right. So, as you know, and as we've reported, Secretary of Defense Lloyd Austin went in for some what he probably thought was routine surgery for prostate cancer in mid to late December, and then had some complications and was out of commission for several days and didn't inform the White House until recently. And in fact, it wasn't until today that he revealed that it was prostate cancer that had been afflicting him. So the upshot of this basically is that President Joe Biden is under a lot of pressure right now to figure out what he's going to do with Secretary Austin. He's said so far that he's going to stand by his Secretary of Defense. This is, of course, an election year, so you don't want too much turmoil at the top. But this is really sort of unprecedented in Washington, where you have a very key official at a time when the U.S. is involved in military operations all over the globe, essentially missing for several days. So I think there will be a lot more to come from this as time goes by. But for now, we have an answer as to why he originally sought treatment.
Dan, as you mentioned, it's an election year. It's also a year where the U.S. indirectly remains engaged into active wars. Secretary Blinken's trip to Israel, his fourth since the October 7th attack. Has any progress been made? The messaging has been pretty consistent, but also pretty different to how the operations have been conducted.
Yes, that's right. So Secretary Blinken has traveled several times to the Middle East for a couple of reasons. One is to sort of tamp down some of the regional tensions in the area. Of course, we've seen some attacks in the Red Sea by the Houthi rebels out of Yemen. We've seen some strikes on U.S. forces in Syria and Iraq. And obviously, there is Israel's response to the October 7th attacks, in which it has carried out full-scale military operations in Gaza. So Blinken essentially was telling Israel to consider what comes next, and to not try to keep its boot, as it were, on the neck of the Palestinians in Gaza after whatever its operation to eradicate Hamas is over, and to sort of let the Palestinians be able to create their own government and have self-governance in that territory. This is something that Israel has talked a little bit about before. They've sort of indicated that they might want to leave some sort of a force behind for an interim period of time until new government is in place. They may potentially leave some troops stationed on the border between Israel and Gaza. But Blinken's message was basically that something needs to happen after this operation is complete that will allow the Palestinians to sort of take back their territory and to have a new government there.
Dan, on Ukraine, just to turn the situation a little bit towards that area of war. It turns out that there were some talks last week about peace and the peace process. Talk to us a little bit about what this plan is and whether it has any kind of a chance of succeeding.
Well, it's very interesting. I mean, we're heading toward the second year anniversary of Russia's invasion of Ukraine, and we've kind of entered a stalemate, essentially, where based on all the folks that I've talked to, we're looking for basically a grinding stalemate for the next year or more. And so these peace talks are coming at a very interesting time because they sort of indicate that there may be some discussions happening and that the U.S. and its allies are getting a little bit more comfortable with the idea of having these discussions at least reported in public, because initially the U.S. was very reluctant to say anything about peace talks. They were always putting the sort of the onus on Ukraine, saying we want to defer to Ukraine in terms of how this will unfold. And now you see the global South, or the so-called global South, being involved in these talks. And that's really key, because it's important to keep in mind that if you look at the map, a lot of the countries that have the most population in the world have stayed neutral in this conflict. So I think the U.S. and its allies are trying to court them, in a sense, to get their perspective on how they would like to see this unfold and wrap up, and have their participation in that. So very interesting time indeed.
Bloomberg's national security reporter Daniel Flatley there in Washington with some of those top stories. And staying with geopolitics, and China's top envoy to the US says Beijing has no room for compromise with those advocating for Taiwan's independence. Ambassador Xie Feng also urged the US to follow the One China principle. Taiwan votes for its next president this Saturday. China has previously called Taiwan's ruling party's candidate Lai Ching-te a troublemaker whose views risk sparking a conflict. Well, relations with Beijing are top of mind for voters heading into Saturday's poll in Taiwan. Bloomberg's Stephen Engel reports from a rally for one of the opposition candidates from the traditionally Beijing-friendly KMT party.
It was a homecoming crush for opposition KMT presidential hopeful Hou Yu-ih as he rallied the faithful in his hometown of Jiayi in southern Taiwan. Hou and the other opposition candidate, Ke Wen-je of the Taiwan People's Party, or TPP, are making separate last-minute pushes to defeat the more independence-minded ruling DPP and its candidate, Vice President Lai Ching-te. It's a three-horse race for Saturday's election after the two opposition camps failed to form an alliance, a fraught union that could end up splitting the opposition vote.
I feel like the biggest room for cooperation between KMT and TPP will be the number of seats in the legislature. Our goals are the same, to switch the party in power. The DPP government has not been doing well for the past few years. People are more fearful.
That fear she's referring to was amplified Tuesday afternoon when cell phones island-wide blared emergency alerts erroneously saying that a Chinese missile had flown over Taiwan, and for citizens to be aware. The KMT was quick to latch on to the mistake.
When I first got the alert, I thought it was an earthquake. It turned out to be just a satellite. But the English in the message said it was a missile, so it made people panic. Even though the DPP came out and apologized, it never should have happened, especially now when the election is so intense. It made people feel threatened by China, as if they want to take over Taiwan. I feel like the DPP manufactured this fear.
These two KMT supporters felt the same way and see closer ties with China as a benefit, not a threat.
We need to keep good communication with the Chinese Communist Party so we won't have a war.
The two main opposition candidates agree that the DPP is putting Taiwan at risk and that they must diffuse tension across the Taiwan Strait. Now, on the other hand, they cannot show to the Taiwanese people ahead of this election that they're cozying up to Beijing too closely and that people could perceive that their efforts to get closer to China could put the long, hard-fought democracy and freedom here in Taiwan in jeopardy.
I think being closer with China for trade is not such a bad thing. But freedom of thought is what I want more. So I don't want to be closer with China.
It may be the very issue that decides the vote and sets the broader geopolitical tone in East Asia.
It's very, very important, this election, because it's life or death for the Republic of China. Because China is our roots. China and us are inseparable.
Stephen Engel, Bloomberg News, Jiayi, Taiwan.
And we'll have special coverage from Taiwan all week. Stay tuned. This is Bloomberg.
We do have confirmation of the Hewlett Packard Enterprises and Juniper deal. HP Enterprise to buy Juniper for $40 per share, to buy Juniper Networks for $40 per share in cash. When it comes to the deal, when it comes to the estimated value of about $14 billion, the deal would be accretive to adjusted EPS in the first year post the close of that deal. We're seeing Juniper Networks climbing about 3% on that deal to be acquired by HP Enterprises. That the Juniper CEO will lead a combined HPE networking unit there as well. Bloomberg Intelligence saying that potential acquisition now being confirmed would help fill a gap in the portfolio to expand that data center and cloud networking presence, but potentially doesn't leverage the scale against the likes of Cisco.